current squad leaders, current people going through the boot camp, right? Like during the graduation or the new boot camp, feel free to, when I open it up, come up on stage and talk about, give your testimony, right? And now this isn't the moment for you to sit there and be like, oh, it's amazing. No, this is the moment that you give raw feedback. Like, hey, listen, guys, you got to listen to the 5:30 shows, because if you don't listen to it at 5:30, you're going to fall behind. Or I used AI to do this, or I had note cards built this way. Like, this is the tips and tricks of like how you made it through and what you found aha moments from, right? So like when I call you up, that's what that's for. If you come up and you say, I didn't like this part, that's what we want to hear. Like, that's more so for the graduation portion. Because I wasn't able to actually I need to use Pocket. Like, will you remind me tomorrow to put together the survey polls for this class, right? That's the one thing I almost forgot that's not on my checklist.
You're posting a little note.
Yeah, I wrote it down too, but we got to post the surveys tomorrow, so we have a full 24 hours to let them vote and poll to see how they did. Other than that, like, I think I got everything I need to talk about. Like, I'm excited to pass this class off. I'm very excited to grab a new class. And, lift my left arm up, wave with my right, and say, come here, little fella, get in underneath my wing, because this is what I love to do. This is like my thing, right? And I'm passionate about. So, yeah, let's get after it. Pocket, Austin, y'all got anything?
I'm good.
Yeah, no, for me, man. I guess one thing is, like, guys, I've been trying to use a lot of the time I have now for a lot of the trade sessions we're doing to, get a lot of like trade recap videos, that type of thing, to, doing this with intention this year to just keep trying to find ways to give you guys more value of just showing how we do the same thing, maybe just in different ways or different languages. So I'm trying to go heavy on that. So if you guys like the videos, or you need anything else, or you wish to see anything else, just give me suggestions, and that way I can make the content a little bit better for you guys to. What's up?
Yeah, I was gonna say, please give Austin feedback. He's like really putting a lot of work into this. Me, you know how I deal with it. Like, I'm like, I don't give a shit what you guys think. You get the raw version of it. Like you get the raw version, but Austin's really trying and making a collective unit to see what is sticking, what's not just sticking, and going from there, right? So definitely any feedback's better than no feedback. If it has anything to do with what I do, right, like, keep that feedback to yourself, because I don't care. That was a joke.
But you'll see you'll see all the videos I'm dropping there. I just put it in the Reengineering chat. It's just under the free EDU section. So anytime I upload anything, I'm just going to ping it there, like long form video wise. But I've been trying different methods. I've been trying, just the text on the screen with the trade executions. I've now done like a reaction where I'm talking over the live thing, and then I just have had live execution videos where you just see the live execution. So trying to find different ways that relate to people. So however you guys, like, if you were to be like in the perfect scenario, if somebody were to explain to me how they execute, this would be that, right? Like, that's what I'm trying to find. So that way, anytime people are curious or have questions, because you guys are all the reason why, and the reason I choose the content that I choose. Like, a lot of you guys come to us with, how do I choose extended TPs versus cash flow TPs? So lately, a lot of my content's been around that, so you guys can see more of an understanding of what that is. If it's something else, like, the mean reversion of a statistic, or how do you use this, whatever, right? Like, whatever common hurdles you guys are having, I want to double down on making content around that, so that way you guys have ample reasons and pieces of education that are super easy and quick and concise that you can always reference. So that's all I got.
Okay, last announcement. So Dominic and Tiffany are doing the Wolf Tank together the same, because they're Ranger buddies. So that Thursday, the Thursday classroom, so 5:30 slot is open for anybody who wants to pitch their Wolf Tank presentation. If anybody is still waiting to do that, or didn't have a slot for it, like it's open. So grab it, reach out to Pocket, start a support ticket, whatever you do, and get after it. All right. Next up, last thing.
We forgot one thing, Nick.
Yeah, the devs.
The devs. Dev appreciation.
Yeah, so dev appreciation, right? We're going to push it back maybe another week. I'm not going to say what it is because like half the devs are in the room right now. But you guys already know what the Dev Appreciation Day is, right? I need you to do what you're instructed to do and reach out to the people that you're instructed to reach out to, right? So we can take care of these devs because they're awesome devs. Got it? That's it. Somebody's jumping up and down in the audience. There you go. Like, I'll give it to you in code. I'll delete one. I'll delete this guy. Besides Alpha Profit, the two people that tagged me, well, the one that tagged a lot of people, okay, reach out to Tiffany and Lori Croft, right? Like, they're putting that together. And so, like, reach out to them, figure out what is owed to you guys. And that way we can show these devs true appreciation. I remember we want to do it in a unique way because most of them don't need money, but they've got the retired, like one of them, Jerry's he's retired from being a Thinkorswim coder, right? Do you think he cares about money? No, he's the only reason he's doing this is because he appreciates and he understands the importance of the indicators. And he knows that there's so many companies out there that's trying to take advantage of making you pay $60 a month for one indicator, one package without education on how to use it or how to trade it or any kind of that. So like, let's reach out to them and, really give them full appreciation of what they do. All right. So with that being said, all right, Shihan, I will not press any buttons that you tell me to press, period. Because the last time I listened to you, my whole computer shut down, and that was that. You should be able to talk, man. How you doing?
Yo, hello.
Hey, buddy.
How you doing, man?
I'm good.
Good.
You ready to go?
I am.
All right. First and foremost, how was the boot camp? Right? Who brought you in first and foremost? Who gave you the shoulder tap?
Pac did. Okay, Cody.
So Cody gave you the shoulder tap. Awesome.
Yes, sir. Yeah.
And what did you think of it? What were some of the aha moments? What was some of your favorite phase? Like, what really stood out to you? Wait, are you trading a 930 strategy? Are you pitching that?
I am.
All right, guys, and that concludes the rest of this Reengineering session. I hope you guys have a great day.
Seriously, I was just trying to walk away from the computer. Now I have to wait for him to share his screen before I can fix the recording going. Jesus, dude.
Oh, quit crying.
Well.
Hey, what happened? And he's gone again.
What is going on?
I don't know, man.
He's going on.
Go on and show your screen. All right, tell me about the boot camp.
Oh, dude, this was the best thing, honestly, I've ever done. I can't thank you guys enough for everything. I learned a whole lot. I mean, it really just changed the way I even looked at the market overall.
Give me some of your background. Like, give me some background.
Of just like how I started trading or what?
Yeah, how long you been in the market? How you started trading? Right. What were you focused on?
All that. Kind of my first slide says that, but I'll just go ahead and tell you guys.
Okay. Then
should I start it? Or?
Yeah, tell us.
Cool. So I've been trading for the past 6 years. I started in 2020. It all started off with crypto, pretty much. I got in on like the big, bull run for Bitcoin. Ended up losing all my money. Didn't know how to, or when to take profit. And then I got into options, lost even more money. Got into futures, lost even more money. And then finally, I met Pac online, and he was the reason, I kind of kept trading over the past 6 years, to be honest. So big thank you to you, Pac. Yeah, he was a major help in all of this, and I really can't thank him enough.
Good stuff. And so, what strategy did you come from? So one of the things I say is, like, what we do here can facilitate any strategy.
There, yeah.
But like, which one did you come from?
There's too many different ones. I mean, it started off with like support and resistance. I went down the ICT rabbit hole. I went through. I think his name was Dave PTFX or whatever. Where we learned market structure. What
Did you
I
say?
forget.
Did you say
DTFX?
Yeah,
DTFX.
PTFX.
Yeah.
I know exactly what you're talking about. PTFX. Yeah.
Yeah, me and Pac
for that.
learned. Yeah.
A lot of people fell for PTFX's scam. Oh, you mean Dave DTFX, not PTFX. Got
Dave,
it.
yeah, Dave. I forgot. Yeah, whatever it was.
PTFX is one of our live traders.
Right. My bad. Not you.
No, definitely him.
Yeah. So I went through a bunch of different strategies that just I was never consistent with.
Okay, so what like stood out to you the most in the boot camp that just made you like see the light, right? Like, was it phase 1, phase 2, or building your own trade plan, business plan? Like, which one was
Definitely
just like
phase 3, dude. I mean, this
nice?
last month has been a grind. Like every single day, just been fully going at it. I can't, me and my Ranger buddies, we put in so much work for this. So very thankful I had Ben and Joe along the way. But yeah, honestly, like I knew the data part was going to be a pain in the butt, but it was so worth it. It was so worth it.
That's epic. I'm glad to hear.
Yeah. I mean, I've never
How
been
old are you, by the way?
data. I'm 23.
Okay, got it.
Yeah.
Cool. You never been into data, you were saying, and I cut you off?
No, not at all. Like I would have never, I never thought to even collect data one time before this boot camp. So you guys have really opened up my eyes for everything.
Good stuff. All right, well, let's get this party started and let's hear your plan.
Cool. Right,
what do you do for a living?
I work at a bar, honestly. I work at an Irish pub. I went to college for a few years. No, I'm not Irish, but it's just really good money over there. Bartending / serving. So it's kind of what I do in the meantime.
Us mix. Like, I tell you what, we like to do 2 things: drink and tip our bartenders.
Yes, sir.
How tall are you?
I'm 5'9".
You're taller than Austin. You may pass go. You may collect $200, and you can start.
You are allowed to make. You're allowed to make fun of my height.
Man, I get bullied by Pac all the time for saying I'm short. Yeah. So, kind of already explained. Yeah, I'm 23. Did this. Yeah. So I told you on my trading journey. All right, let's move on to the 930 breakout trade. So the rules are, I'll take the first 3 breakouts from 931 to 959. It must close outside the 930 candle for it to be, an entry. I will be paying the queen at 0.1. Extended targets will be depending upon the daily profiler and my stop matrix, which I will get into later. The hard stop is either at the 75% of the opening range or the other side of 930. In most cases, I do cut the trade early if it does close on the 50% of the opening range. If the entry is a 0.1 to 0.2 basis points, then I will use the full range, and I will only go for cash flow. 0.13 to 0.25 opening range, I will use the 75% as my stop loss. If there is a 0.3 opening range, then most of the time I will wait for a pullback, or I just won't trade it because I can't really define my risk upon it. Max trades is 3 per day. During my data collecting phase, I use just $500 for each trade, but while I'm forward testing, I figured I'd use $400, and there is a reason to that. I will get to that later. Start time starts at 8:30 when I start wargaming, and then most cases I'm done by 10:30.
So that means, like, because you're 23, you're old enough to know better. That means I shouldn't be seeing posts of you taking trades in Asia.
Correct.
Or pre-market.
Right. Yeah, I stay away from all that.
All right. Well, what if, hear me out here. What if you get the high day at 9:30, all right, and distro was good overnight, so you're expecting the low of the day at 1,500. You're still not going to take a trade?
Wait, you're saying overnight?
No, I'm saying like, let's say overnight distro is good, and you
Oh,
got
yeah,
the
yeah.
higher day. You got the higher day at 9:30, and you know, right, low day is going to be at the end of the day. You're still not going to take a trade.
Correct. Yeah, I only
All
trade
right.
from 9:31 to 9:59.
Remember, man. Like,
Hold me
listen, like,
accountable.
listen. Like, I can't tell it enough. How many times I've seen people come up, or when I ran the 9:30 room, I told them, like, listen, your job is to trade between 9:30 and 9:44 because that's when my 9:30 trade plan is. Like, that's all you need. Yeah, yes, aren't, yeah. Like, they would give me the yes, aren't private, like, lie to your face and then go get in a bar fight that night. That response, like, and then they would end up blowing their accounts. Like, you are making a contract. This is when your business is open, 8:30 to 10:30, man. You have no business even looking at a chart outside those times, right? And if
Right.
you can stick to that, you will be okay. All right, let's hear the rest of it.
Cool. All right. So this is my baseline stats across 6 samples that me and my Ranger buddies collected. I'm providing the MAE and the MFE of each sample, the median, the average, and the 20 through the 80 percentile zones. I have an in-sample data, which is at the top. I got 2 high volatility ones, which is the tariffs, and this was another high volatility spike in the VVIX. And then I did include 2 low volume samples and then 1 in the bear market as well.
Good.
Now from this data, me and my Ranger buddies, we sat down and we were, analyzing this and saying, okay, so where would be a good, place to start this off with? Where can we take our first take profit? And we decided anywhere from 70 or 60 to 70% of the time we know that we can get 0.1. So I was like, okay, that's perfect place to start it off. And I know that's where you guys got it from. So I was like, all right, we're on the right track, right?
Mm-hmm.
This is where we found our cash flow target at.
Okay.
Okay, so this is my in-sample data. This was the last quarter, September through November of 2025. And this is just based upon taking it at 0.1 TP. All right, so this is just like the first kind of the first exercise that we did with our data. And I'm just kind of comparing the two. On the left, it's going to have a 100% stop loss. On the right, I have a 75% hard stop and a 50% we will close early. So as you can see, doing it this way, it does decrease your strike rate a bit, but it increases everything overall. I mean, my net profit increases, my profit factor increases, expectancy, all the good stuff that I'm looking for.
Wait. Let me pause this real quick.
Yeah.
So this is saying the one on the left, right, is either 0.10 TP or a stop loss. The one on the right is 0.10 TP or 75% 930 stop loss.
Right, yeah. So I'm using the hard stop at the 75% mark. So like on the right, I'll be able to get in, with more more contracts, but I pretty much got stopped out more doing it this way. That's why there's more trades doing it that way.
Absolutely. You should have learned that in phase 2, right? Like, did you learn that in phase 2 when you're doing when you're finding out there's not all that much edge laying around? You got to be very specific with the levers. Like you just pulled the right lever to do that, right? That's awesome, dude.
Yeah, thank you. So that was this, and then I dug even deeper. Last week I got on the call with Austin. I was trying to figure out how can I make this, less mechanical, because we all know it's not going to work out. And he actually really opened up my eyes with something with the stop loss matrix, and he gave me this exercise to go do, and that is pretty much how I'm basing everything off the stop loss matrix, which I'll get into later. But it increases everything overall. This is the same sample. My strike rate increased. My profit factor increased a lot. Net profit, expectancy. Overall, I mean, this is everything I was looking for. So I was very satisfied with finding this sample, that it worked out well.
All right, real quick. All right, so go back to the last slide and let me see something. All right, so 5, and then this one's 6. Go back to the one you were just talking about. All right, so you got to understand, right? Number one, So you said 500 risk per trade. How many?
Mhm.
How much is your daily loss limit?
Whatever on the account, it's 2,000. So 1,000.
Okay, so 1,000 or like so? Are you
No,
taking two?
it's 2,000. I'm sorry.
Okay, so you can take 4 losses in a row without blowing the account, right?
Right.
Now, how many attempts are you taking at this per day?
It'll be the first 3 breakouts, win or lose, between 9:31 and 9:59.
The first 3. So
Yeah.
technically, you're only taking 1,500 worth of losses a day. Because what I'm noticing, right, if this is across 78 days, right,
Mhm.
right, I see that the max consecutive loss is 6 days in a row. Now we know that variance, and that's just 6, right?
Right.
Right. So 6 days and 6 losses in a row. Did that come from one day or multiple days, or like
It
explain
was
that number
across.
and how?
Sorry, it was across 2 days where I lost all 3 trades in a
Okay.
row.
So 3 and 3. And
Yep.
how many times did that happen?
One time across
One
6
time because it's
samples.
max. So the median consecutive, is that wins? Because there's a W. What should
Oh, yeah, medium consecutive wins. Yep.
medium consecutive losses, like what is that? Oh, okay. So your
The
max
median.
consecutive, yeah. So
Yeah.
your max consecutive losses was just one event in 70 something days, 78
Yep.
days. That went 2 days in a row losing, and then the median was one consecutive loss. Wow, that's
Yep.
pretty impressive, actually.
Yes, sir. I
Good
was
stuff. Now, how many days? Obviously, this is your in sample
correct.
back test, right? Like, does your out of sample support this as well?
Okay, so that's where I'm getting to. I finished the sample 2 days ago doing it this way.
Okay,
So I have not made it to the other samples yet. I
got
just
it.
have the baseline stats for those as well, which I will show after this.
Okay, I think
Um,
Austin's got something. He came on mute, so I'm gonna. You got something, Austin?
Yeah. So, what did you say when Mickey asked you about how many attempts you're gonna do? Break down exactly what gives you that trade frequency and why are you like how are you taking your attempts? Basically, you said you're just taking the first 3 breakouts.
yeah, okay. So let's say, like today 9:30 broke out to the top side. I took that trade.
Yeah.
Well, actually, this is a bad example because I didn't get any more trades than that. But so overall, so yeah, I'll take the trade to the top side, win or lose that. Now the price has to come and reach the other side of 9:30 before I can take the second attempt. Okay, it either has to stop me out
Okay.
or it reaches the other side of 9:30. That's just how I was testing it for all my stuff. And then it could break either side again, and I can longer short. If that
So
made
the one
sense.
thing I will say is like just like how remember our conversation last week when it came to we build these spreadsheets and we build this data to do what? We build our baseline accuracy, right?
Right.
So the same thing needs to be true for if you give yourself a trade frequency, that frequency needs to come from something. And so if you tell me, well, I'm just going to take, the first 3 breakouts, there's a key thing that I'm really wanting to hear from you and I haven't heard it yet. Did you watch our live stream this morning? Our live trade session?
Yeah, I watched part of it. Yeah, I got off around I think 10 o'clock.
Okay. So do you remember when we broke out to that first breakout candle to the downside? Did I take that short?
You did not. You couldn't define your risk.
Why didn't I take it?
Couldn't
Exactly.
define your risk.
So
Yeah.
I couldn't define my risk exactly. And so the thing that I want you to go find now, right? And this is just little notes that you can do for the future is I don't like that your answer is just a static, I'm going to take the first 3. Now, listen, anything that I say I don't like doesn't necessarily mean it's good or bad or you need to do something different. I want you to just clarify that a little bit more. You know what I mean? Because
Especially
I don't
when
take
Right.
just every
it's
breakout, right? We put context to when those attempts happen. That breakout, think of it like this. That breakout is just an objective entry criteria that aligns with whatever your overall idea of the daily candle is. So if that breakout happens, but let's say, let's go back to today. We broke out to the upside, and I know based on the statistics and the numbers that within a Tuesday, we at minimum provide really decent cash flow movements off 930 right away. So if I know that the context of the day is we're most likely due now for a false than a true, and then we also have that high day at 830, which we know, okay, you guys learned this in, I think, phase 2, that 830 can provide some leading contributors of a potential high day, low day, if it's a news event. So when you have that context of where that wick could be from the daily candle, and then you're like, okay, cool. Well, if I do want to give myself some exposure to positive expectancy, I'm going to, but then I'm going to do it with intention. And so that way I take that long, but then to the downside, I'm not just now looking for a break. I'm looking for a break that, number one, defines my risk, and number two, still aligns with the context. Okay, so and again, I'm telling you what I do. It doesn't mean you have to copy it or that what I do is the golden standard. It's just I want, you know how I just said that, right? It's, if you were to ask me, Austin, what do you do? Yes, I give myself 3 to 4 attempts, but the context of those 3 to 4 attempts are still going to be around, number one, what is the daily profiler telling me within the context of the day to validate those attempts? And then number two, first and foremost, can I always define my risk? Okay, does that make sense?
Yes, sir. Yeah.
And then, you
okay,
gotta
cool.
you gotta be very detailed with this part too. And I'm glad Austin brought it up because I assume, because you said the 2000, you're gonna trade a 50K account, so your survivability is 4, and that's what happens when you trade breakouts, right? Like you have to assume a little bit more risk, right? And now you've got to, because like you're 23, right? And like this is a new system for you, right? And you're already risking to the point where in 2 days you can blow the account, right? So confidence, like you're destroying your confidence in the system when that happens, especially if you go through a variance where it's like it happens 2 days here, you're going to win. It happens 2 more days, and then you go on a win streak. Like you're not going to be able to enjoy that win streak because you're not even trading the system because your confidence shot, right? But because you're risking so much per trade, right, with a small account, like at any given time, I could say, Austin, like, why did you choose the 150 over the 50K accounts? And he would tell me, well, look at this data, right? Like this is the exact point that was like, this is the exact number. It goes through this many consecutive losses. And so I know I can sustain that consecutive loss period with $4,500 worth of drawdown versus I'm going to have to blow the account. It's going to mess with my mental. And then I'm going to have to pay for another account, and the opportunity cost isn't worth it. Neither is a loss of motivation and confidence in the system, right? So like there has to be that's why we put a risk per trade on it, because it's about the survivability and the sustainability of being able to trade that system, right? So definitely take his advice on that. All right.
Yep. I do have, I will get later into it, but I have like a rotating strategy that helps me out so I don't blow these accounts as much.
Okay.
I'll show you guys that after. Okay, so I just wanted to add my forward testing data. I started on my eval last week, so it's been about a week and a half, and everything is looking pretty good. I mean, I've had the last 4 trades I've took were winner trades. My first 2 were, I had a break-even trade and then 1 loss. But I'm up $600 with a 2.48 profit factor. So I'm pretty happy the way it's going so far, doing it this way. All right, now we're moving on these are all based upon a 0.1 TP because I haven't gotten to.
All right, go back to your forward test. Here's something I wanted to see if you did. So what is so if you're forward testing now, right? What is the purpose of what we do when we back test, when we do the in sample, out of sample? What's that key thing that we need to understand and take away from when we do both in sample and out of sample?
The variance of the data.
Okay. And so what areas of variance is this forward testing operating in within your in sample, out of sample? So like, for instance, let's just take your profit factor. Where does that profit factor lie in your in sample, out of sample? How does it compare?
So it's a lot more in my so far, at least, just because there's so few trades.
Yep. And
Yeah.
so what would that range be? What would that range be? So based on your insight last time, do you have that like fluctuating range? Like this data that I collected can operate anywhere between X and Y profit factor. This, has anywhere between X and Y max drawdown or whatever.
Yeah, I haven't really gotten, I guess, to that point yet, because I would love to do that whenever I do go and do like a dynamic way of trading all my other samples.
I'll tell you a very simple way to do it, right? The reason why I ask you these things is because if you don't, I'm going to give you the solution, right? So solution here is you already got all this data, right? It's as simple as a little formula in Google Sheets. So if you have this in sample and at a sample, just make it into a range. So if you have, I think your first screenshot you had like what, 6 different like chunks of back test, right? Like different quarters, I think it was. So do an average, a median, okay, of all of these metrics. It'll take you 5 to 10 minutes. You just do an average and a median of every chunk of so if you got 6 chunks, every chunk has an average and median of prop factor, max draws, median draws down, all these things. This is what's going to build you that range of expectation. So that way you know that, right now you only got, 6 total trades. Yeah, that's very little in terms of forward testing. But now you have a temperature gauge. Just like when you go outside, you have a general feel for you when it's cold or hot, right? Like you're like, oh, it's 60 degrees. I'm used to the cold or I'm used to the hot, so that's not bad. But when it gets down to this, I know I start to get uncomfortable. You need to know, right? Now that you have all this data, you don't have to go and reinvent the wheel. You have it. Just run the formulas, and now you have this range of anytime I want to check on my forward testing statistics, where am I operating at within these different ranges that my data has already given me? And just use it as a temperature gauge. If it starts falling below, anything starts falling below, see, okay, what is causing this? Am I doing anything different? Is this just maybe an anomaly? Is this within range? Because this will also help you, and this I speak for everybody here, this will help you psychologically. And this is the main problem when people do some sort of statistic or they do back test, is they view their performance data, even in the forward testing environment, and they view it as a static number that should always be this static number. But we know everything is a range, whether you're shooting for a level, whether you're building data, everything operates within a range. Nothing is static. And so when you understand what that range is and you can apply your forward, because I promise you're going to go through drawdown at some point. You're going to take some losing streaks. You're going to, as you get more trades on this forward test, and it's going to test you a little bit. These numbers and metrics that you can fall back on is what allows you to get through that, that human aspect and really focus on the logical thing, which is your business, your numbers. Okay. So that's why I'm telling you all this stuff.
All right. Thank you. Yeah, I'll definitely get work on that. Okay, so this is another sample. This is tariffs, high impact news, and I'm just showing you again the difference between the stop losses and how it affects it. And like I said, I will go and do a dynamical way of trading this. I just haven't got to that point yet.
Hold up. Which one's the tariff?
This one, right? Both of these are tariffs. It's just using a different stop loss. So like I'm using the whole range on the left side.
Got it. Got it.
Okay.
Give me a second. Give me 1 second.
You're good.
That's pretty cool. Oh my gosh. Like that is epic. All right. So like the smaller stop loss, right? The shorter stop loss, right? Which costs less of the business expense as less expectancy, less profit factor, and less probability of survivability in a high volatility environment, right? Like that's, I think you call it like, what did you see when you compared these two data points? Probably shouldn't give you the answer.
Well, I knew this was a time where I can't, I would have to turn off, the system using the 75% hard stop because it affects it too much. I mean, I won't be able to survive using a 75% hard stop compared to the 100% because there's just too many wick outs involved, too many extra trades that I shouldn't be in.
Yep. Exactly.
And that's why I added in this, just to show the difference between it, so I know when I can use that stop loss or not.
Dude, that's a pretty cool feature. Like, you doing that is pretty epic, man. Like, I really appreciate you doing that, because I built a strategy tester to show you what levers you pull that does it, but then you sat there and back tested it, which, no crap talking on anybody else, but getting you guys to collect data is like pulling teeth, man. Like, that's why I built it where I do most of the work for you. But like, I appreciate you like taking the effort and doing it the way me and Austin do it, because like you can like it answers so many questions like that.
Yeah, dude. I mean,
How long did it take you to collect one of these samples? Like for these two right here, like, which is approximately 300 or 200, I don't know. Like, how long did it take?
One sample. I mean, dude, I would sit here literally for like 5 hours just to get it done. I'm not even gonna lie. So I probably finished this within a day. This sample.
Okay.
A day or two.
All right. And so now you're going to be able to leech off this information for the rest of your life, or as long as the NASDAQ keeps moving within the volatility state it is. And since when I look at the VVIX, it's been pretty similar volatility space, expanding or contracting for like the last 30 years. So I think you'll be safe.
Oh, yeah. Also added in a low volatility one on the VVIX, like a low spike. Just showing you the difference again within it.
Did you measure the 930 range? Like, do you have the same data for the 930 range? Like,
I do. Yep.
Cool. Did you notice a difference between, and you should have, like, did you pay attention to the difference between the higher volatility 930 range and the lower volatility 930 range?
Yep.
It's pretty obvious, right?
Yeah, dude. That was like the light bulb for all of this. That's where my stop loss matrix comes in.
Okay, cool. Dude, that's why I teach volatility the way I do, because it's like, it's such an eye opener for strategies. Like, yes, guess what? When tariffs was coming out, guess what? The data for daily profile, the candle science, it was all still working. Everything worked on the how to read a live market, how to, align historical data. From an analysis standpoint, everything still works. But this is what destroys people who don't know the true numbers of their data, is when volatility expands. And for example, like if you use a structure-based stop, right? Like your stop was like $10,000 or $1,000, and you could have been very close to it, and it still would have been worth a lot, because structure-based stops, you can't fix the position size, right? You can't fix the business expense, right? So like, that's why like that is so important to know, because even though the analysis part works and the data of how markets move and when they move still works, from a trade perspective, you just went from having a typical 5 to 10 hand, 20 handle 1 minute candle to having a 50 to 100 1 minute candle, and they're all like that. So that's why the data that you need, like, that's why we have separate data for volatility expanding, volatility contracting, and then overall, right? To capture that. Good stuff, man.
Thank you. All right. So now this is my favorite part. And this was kind of like the assignment that Austin gave me, and this is where I got everything from. So the stop loss matrix and risk management. Out of my 6 samples, I only had it was a max losing trades of 6. In most cases, it was 3 across all the samples, and that only happened one time. So that's where I told myself I will allow myself to trade, $400 risk per trade, and I will be okay if I do blow the account, because it was a small chance of happening. Now, what the stop loss matrix does, it helps me define my risk and helps me find TPs depending on the opening range. This helped me know when to take just cash flow and when to extend targets and what MFE to target doing so. I figured out a 0.1 opening range will purely just be cash flow for myself. A 0.15 opening range is my golden zone. This is the zone where I will be able to get the optimal amount of contracts on and get the best extended targets depending on the daily profile as well.
I feel like you stole my data, because that's the same. So I have it. So, I trade 930 a little bit different, right? So I buy pullback candles, right? And so if it's above 0.15, that is a damn requirement. At any given time, I can take a breakout 930 trade, but if it's above 0.15, like there's no way I'm taking a breakout because of the amount of risk per trade and how much I'm trading. Right. So that's pretty cool. And my dad is off for 20 years. So that's cool that you saw that.
Yeah. I will say, so this data that I'm getting from, this is only across 4 samples. I haven't completed the other 2. But yeah, this is what I got so far. 0.2 to 0.25 opening range. It'll pretty much be the same. I'll take TP at 0.1 for covering the queen. And then the extended targets will depend upon the daily profiler and my stop loss matrix that I have created.
Okay, real quick. I'm going to
Yeah.
throw you for a loop, right? And I want to see how good you know it, right?
Uh-oh.
So I want you to go to TradingView real quick and explain this to me using the price range tool. Can you do that? Or is that too much pressure?
I think I could do that.
All right, it's your model. You should be able to.
No, I could do that.
All right. All right, so highlight the 930 and then walk me through this.
So today I measured upon the 930 like so. So this is a 0.18, so this would fall into my 0.2 opening range bucket. And then I was about to show you guys what it is, but so this is the matrix that was created from Claude, and I did have Pack help me out with it. But yeah, so it shows you if you do land upon, a 0.2 opening range. I just went ahead and I looked today, and I was like, all right, well, I'm going against the losing team, so I just figured I would take only cash flow, which was at a 0.1, and that's at the 30 percentile zone. But if I was to get an extended cash flow target, then I can go and look at the metrics and see, okay, at least 50% of the time I will get, a 0.2 extended TP or a 0.3. So that's kind of this. That's how I'm basing my extended TPs is all from this.
All right, exactly. Right now, show them. So, like, dude, this is my mind's blown because this is the shit that like me and Austin like really love. This. Well, Austin told you to do this. You didn't come up with this, right?
Yeah, no, this is he told
I'm over
me, he
here
showed
losing my
me.
mind right now.
Oh my God! Never mind. You're not getting any credit for this. Like Austin, good job for telling him.
What?
Never mind. You're a shitbag.
Oh
No,
man,
dude, this guy went even above a bit. Like, this guy went and took not only this is even better than this is why I love y'all. Like, this isn't just a risk matrix. He went and actually then bucketed the risk matrix in the size of 930.
Yeah.
And look at this. Like, you guys can even see the clean distribution of where the number of 0.1 to 0.15 to 0.2. Like, I like how you calculated actually how many, so you can see the distribution, and of that distribution, what the 50th percentile MF. Dude, this is incredible. Like, just amazing work. That's all I gotta say.
He did this on purpose because now, like, all the traders who haven't been through the boot camp are like, "There's no way I'm ever going to figure this shit out." Did you know any of this profit factor, any of this stuff before you joined the boot camp like 3 months ago?
dude, hell no! I did not know. I mean, I knew what profit factor was somewhat, just because Pac was like, we would talk about things like this, but I didn't know like what it was or how it affected it.
So just to reassure you guys who not are like, what the fuck is happening? Where did I end up? Right? Like, don't be scared. We handhold it. We make it make sense. Like, it's not that scary. It's just a different language for you right now. We'll teach you the curse words in the beginning, and then we'll teach you the rest of the language afterwards. All right? Dude, this is epic. Good job.
Thank you, man. Yeah. So, back to it. I was saying, I said it, but I turn the system off whenever it's a 0.05 or a 0.3 opening range. First off, I don't have enough data to support it. And for the data I do have, it's like, okay, 50% of the time it might get to 0.1. So it's just not worth it, in my opinion, to even take this trade. So I just kind of filtered that out. Yeah, with the whole 0.1 thing, I know that I can get the cash flow, but beyond that, it's like it's pretty unlikely whenever we have such low volume.
Yeah, exactly. You know it.
Yeah, so that's where I got just 0.1 opening range. I'll just do cash flow and then so on. And there's some other cool stuff down here. It just shows you the difference in the MFE and MAE for each bucket. Yeah. Are you about to say something?
No, I'm just laughing because all these other 930 traders are like stealing your data, which is good. It's fine. It's okay.
That's okay. It's all good. I mean, I couldn't have done this without my
The
partner
most
too.
important part is what, Jihan? You did this. Did you do this first with code, or did you do this first with manual stuff?
Manual. Well, yeah. Well, actually, the matrix itself, no. So I pretty much went in.
No. Like when you started this entire process, did you first start by doing it by hand or by code?
Hand.
Exactly, because
Yeah.
you guys
I
can
don't know
sit
how to do
here
that.
and take. Well, no. To my point, it's what I'm saying. Like you did the Claude stuff with code, but at first, and this goes for you guys that are just joining the boot camp, the existing people. Listen, you guys can take Jihan's screenshot, his data, all that stuff. But I'm telling you all, you can even go and say you think you're the exception, and I'm going to go and make a bot or an algo that collects this data for me. And I'm telling you, there is a level of confidence and a level of just pure activating your brain, okay, instead of just relying on AI to do it all at the beginning, to where when you see this over hundreds of samples, Jihan probably got to the point when he was 100 plus samples deep where he was like, dude, this is just like monotonous. But he's burning these moves into his brain. He is seeing, not only collecting the data, and then over time, he's going to get that snapshot of what the holistic quality of that move is, but he's actually seeing it trade over trade over trade over trade, to the point where now when you're in the live markets, yes, you have the data and statistics to, like, give you that baseline confidence that you're going to have this level of accuracy over the next 100 trades. But you're also just having this level of confidence about yourself that you're like, dude, I've also seen it. Like, I don't just have code saying, trust me, right? Like, you have validated it by hand. And there's nothing that replaces that. I'm a firm believer that I don't care what year it is, how fancy AI is, doing it by hand first just build something in you, man.
Yeah. So go back to your
yeah.
trading view real quick because we are having some questions from a lot of the people on the dumber guy version, right? So go to a blank screen, right? Like just go somewhere where it doesn't show a chart and draw me a 930 box. Make it bright green. Nope, it can't be red. We don't believe in red 930s. Just make it green like they used to. There you go. All right. So this represents your 930 1 minute range, right?
Correct.
This represents your 930 1 minute range, high to low, right? For you breaker traders, like this is when usually the snap happens or whatever, right? Like the size of this 930 range will determine where he can TP. So get you a price range tool out.
All right.
All right. And put it right next to it. Because the way just measure out the 930.
Okay.
All right. So that's right there. Like that's the size of 930, right? Based off of, if you go back to the data sheet, right? Based off of the size of that, because remember, he's a breakout trader. So he's buying the green candle as it closes above that 930 range. Now, the size of the 930 range will determine where his targets are. So his cash flow target. And so what this screen is saying, let's pretend like it's 0.21 or whatever, right? The top column, is the percentile zone. So probability, right? Starting left and right, this is 90%, this is 80%, this is 70, this is 60, this is 50, this is 40, this is 30, this is 20, this is 10% probability, right? And then walk them through the different buckets, right?
Right. Oh, you want me to just explain all this over again?
I mean, just walk them through, like, so all the way to the left,
just like
right?
Okay.
So what does it look like?
So whenever I was doing this, collecting the data, I would measure out the opening range, right? I would say if it was anywhere from 0.3 to 0.7, it would fall in a 0.5 bucket because that's the median of it.
Yep.
0.8 to 0.12 was going to be the 0.1 bucket. And then so on, 0.13 to 0.17 was a 15 bucket.
So basically, he's just rounding fives. We get it. All right.
Yeah,
So that's
exactly.
the size of the 930 candle. And then when you look to the right, what is it telling you?
And so this is going to show you the number of trades in each bucket. And And then, so this is just the minimum baseline of how much it's going to get you. This is going to be the 90 percentile zone of each bucket. So,
Which, so from based off of the number of trades he has, and that's 930 range, this is the 90% level. There's 90% of that data hit this level minimum. You guys understand now? So size of 930, and then based off
the percentage of hitting it.
Yep. And the percentage of hitting it. All right.
Yep.
You guys understand? You freaking retards understand? Type yes if you're a retard and you understand what I just explained. Damn, we got a lot of retards in here. All right, you can continue with your brief now. Sometimes we have to do that, and I totally get it.
All good, man.
And then
I'm just gonna. This is literally the last slide. I'm finishing it off. And I just did this yesterday.
Oh God.
Uh-oh.
You definitely better be able to explain this dummy proof to them.
I'll try. Okay, so the weighted health rotation strategy. This is all based upon Cody's website that he made, and it's just pretty much a Monte Carlo simulator. You put in your baseline stats of what you're trading, and it will give you all the good stuff for your eval phase and your funded phase. So like I said, this is a work in progress, but I'm trading in buckets of 2, right? So I'll be rotating between 2 accounts. And the way the weighted rotating works is it's based upon selecting the group that has the most cushion. So like a healthier group after a loss will get selected, and that's pretty much how it works. It's not just rotating. If I win on this account, I keep trading it, and then I lose. I don't just randomly pick the other bucket. It's based upon the weighted health, which I explained. So for the eval results, I put in that in sample data of like how I was taking a dynamical TP, and it's telling me over 1,000 different simulators. My risk of ruin would be 14% with an 85% pass rate. Average days to pass is 10. Average days to blow is 8.5, and this is how much it just costs for the account, pretty much.
Yeah.
And
so
then,
basically, you're getting an opportunity. You're measuring the opportunity cost along with the performance, the profit factor, the expected value of that account, and that's deciding which account goes through the cycle next. Am I understanding that right?
Yeah,
Cody,
it'll
will you explain it?
Yeah, unless Cody he can do it better. He created it.
Yeah, I'm gonna call up Cody for the win here. Cody, will you break down like weighted health rotation strategies? Because I'm used to it from a larger portfolio, like not like this. What's going into this?
Yeah, so it's I'm in the car, so if I sound weird, sorry. It is based
Not
on
weird,
the total draw. It's based on the total drawdown available across all accounts. So if you're like, let's say you have $2,000 of drawdown in both accounts, then you're just adding or assigning a percentage to each account. So if one has 1,500 and the other one has 2,500. The one that has 2,500 would have more because it's a larger percentage of your total. And then you're selecting you're using a randomizer to select a random number between 0 and 1. And the theory is that the healthier accounts will get more trades because they can withstand more drawdown than the unhealthy accounts.
Got it. Okay, that makes sense. So it's just like measuring like the actual drawdown of each account and giving it a weight of which ones to be prioritized. Cool.
Yep.
Right.
Pretty much. Cool stuff.
And see how you guys don't like it's a skill set breaking complex shit into stupid man's terms. I get it. It's hard.
Oh, I could have never done that. Like I said, I just did this yesterday, so this is all work in progress to see.
No, I mean you did good, man. I like it.
But yeah, this is just showing the funded side. Once I do get funded, pre-payout, I still have a 0.5 risk of ruin. Post-payout, it does jump up a little bit, so I will be worried. I will have a 30% chance of blowing the account
Tell them what
afterwards.
account you're using, because that's going to be specific to the type of account that you're using, because all funded rules are different.
Yep, I'm on a Lucid account. So on his website, you just put in the eval rules and everything, the funded rules. But yeah, I'm on Lucid Flex accounts right now.
Yep.
And yeah, it's
We
just
see
showing
it.
you the payouts, the days to get your payout, the return on interest, which is fucking awesome, my optimal payout size, and then it tells you your best method for this strategy, which is going to be the weighted health, and that's why I picked that.
Nice. Got it. Okay, cool. Good
And
stuff.
that is it.
All right. So, right, if and when you become profitable, right, the compounding effect's going to happen and you're going to make it, right? I know you are. Because if Austin can make it, then you can make it. If I can make it, you definitely can make it, right? Right? So, who do you help? Who do you kill? And who do you fuck? I'm just kidding.
Oh my god.
Who do you help? Like, who are you gonna like? What are those? Like, what's your goal plan? Like to help others?
Shoot,
That's
first off, I'll
legit.
start off with my family.
Nah, that's greedy.
Definitely.
Everybody starts off with their family. Somebody who really doesn't have anybody.
Shoot. Uh, I mean, I'm always, good for giving back to charity. I haven't really thought that far ahead, but I mean, I definitely would. It would be cool to help people out in the community.
Listen, like,
That might sound cliche, but
yeah, that is definitely cliche, man. Like, but like, you have to have somebody that you're passionate about. Like, you got to help people, right? Like,
yeah,
it takes a village to get us to this point in life, and it takes nobody's success came by themselves besides Hitler, right? Like, so you got to like really find like who you're passionate about and how you can help them, right? So dig deep into that, right? Because remember, that's your why, right? Like, I mean, we all have these cliche whys to help our family, retire my mom, like stuff like that. But like when stuff is really hard, when you're going through the consecutive loss period, like what's getting you through that? When you really want to quit or you really want to, like strategy hop or adjust the rule set, like what who's relying on you to carry the boat,
right. Yeah, I'd have to dig pretty deep into that and think about it.
Because right now you're high off of the numbers. Well, like guess what? Right now I'm going to be telling you the same thing I had to tell Josh and like some of these other people that got high off of the numbers. Man, like I can't wait for you to blow your first account so you can get reality, so you can get brought back down to reality. You can get the true confidence you need, and like you can just now move forward, right? And then like when like it's a constant cycle of like you still need the why, right? So like figure out what your why is in life because it's not going to be about like let's say you do this really well and you're able to copy trade it across 15 accounts and your business hours are from 8:30 to 10:30. What are you going to do with the rest of your day? Like what's happening here? Like
Dude.
that's the why.
Yeah, I get it. I'll have to think about it.
All right, man. Remember, if you spend your whole life, right, chasing the dollar and not leaving a positive footprint for humanity, then you've wasted your life and that dollar that you think is your legacy, you've just poofed into existence. Like you're done. It's over. That's it.
Yeah.
I know you're still young, but like that's the reality of where you are in life. You're not thinking like these things. All
No,
right.
you're totally right. Yeah. No, I agree.
Yeah, go, hug some trees and chain yourself to a tree and save some, fucking rainforest or something. All right, I got nothing else. You got anything?
No, that was awesome, dude. I came in here pretty nervous, but I really enjoyed it, honestly. So, thank you guys for giving me the opportunity.
Oh yeah, you did great, man.
Thank you, dude. I
All
appreciate
right,
it.
I got nothing else. I'm ready to eat dinner. Austin, you got anything?
Dude, it's just hands down incredible. Like anytime people come up here and do these wolf tanks, like, and they do this to this level of quality, like this is the standard, guys. Like you don't have to do this stuff, but if you want to have a goal or something to get to, so that way you can build a level of a foundation of some kind to build off of, because we don't expect y'all to be perfect. Like this right here, like just take notes how Jihan briefed, different in sample, out of samples that, and they're not just generic, right? Jihan didn't just take and collect generic statistics. He built the data with purpose of getting to why he's doing what he's doing, right? Like he's saying, okay, well, I'm taking this trade because it's within this criteria. And I pulled this statistic, not just because it's fun, but I pulled this statistic because if it fuels to this way of managing risk. Like I loved it. So really cool stuff, Gian. I'm really, really excited to see how you grow this year as a trader. And yeah, like I'm looking forward, just like Mickey said, listen, I know you're all cool right now. I'm looking forward for that forward test to get some drawdown. I'm looking forward to seeing you take some losses and seeing how you deal with as crazy as that sounds, right? Because we need to experience it. And then just to kind of put a bow on it, because I really like what Mick asked you, is it really is an important thing, right? Is thinking. Again, I love to quote one of the best leaders I've ever had in the military. He told me, he said, always think 2 ranks above where you're at right now. Right? If I'm a private, I should already be thinking and acting and doing actions that a sergeant would do. So in this situation, like if you're unprofitable and you're now getting your foundation built, you should already be thinking, okay, now I am profitable. What does that look like? And that doesn't just mean what does that look like from a financial standpoint. I'm telling you guys, I'm telling you from firsthand experience, and I've seen others, you get so focused and so consumed by just calling yourself a profitable trader. And we always like to sit here and dwell on the bad side of what if I fail? Well, what if you make it, right? What if you do, Jihan, make it and become a profitable trader? There, I'm telling you, like it's going to hit you like a ton of bricks where one day you wake up and you're doing this process over and over again. You're like, dude, I'm actually like, this is the 3rd week fourth week I've actually pulled a payout. Wow, I pulled 2 payouts. Wow, I'm actually getting there. And you're getting this end goal in sight that now you're just lost because you realize that you put all this pressure on just a single outcome that is just an inevitable fact, and it's just a side effect of good process. And good process is always rewarded in the world. So when you base your entire journey off of just a natural end goal of good process, it can get so soul sucking, man. So find something that just fuels your soul. Listen, you're 23, dude. I'm 28, about to be 29. Okay, I relate a ton with you because, you know, I was right there a few years ago, right? It's not that long ago. I was in your shoes, and you know, I had all these crazy, like, dude, I dreamed of just making $100,000 a year, and then when I got there, I was like, nothing's really changed. Like it's like you're basing these weird arbitrary goals because other people have them, and you're just like, nothing's changed. So find something that fuels your soul, man. I don't care what it is. Find something that gives you purpose. Find something that relates to you. And it may take you 2-3 years, but just know that and I'm speaking to everybody at this point, like I don't care where you're at in life, if you keep following good process, eventually the side effect is profitability. So don't give yourself this crazy end goal of just being a profitable trader, because you're going to get there and then you're just going to be like, dude, what the heck do I do with all this time and money, and what do I do with this, right? And you're going to be depressed because you had a monetary goal. You're going to be depressed because you had an artificial goal.
Nope. Before you even get to that point, what's going to happen is you're going to get cocky and confident, and you're going to go try to trade outside of those business hours, as you said. And there goes, you're going to go through that cycle a couple of times, and then you're going to hit this. Because that happens to everybody.
1000%.
Yeah, for sure.
All right. So tomorrow we have Adrian. This is the brief of the Wolf Tank. I have been looking forward to Adrian brief more than ever. Matt, I'm going to call out some people. You don't want to sleep on this one. Masking, you need to wake up tomorrow. Wake up tomorrow at 5:30. Show up to the class. Focus, you need to show up to the class. And anybody with the ISTT-based background, breakers, failure swings, like you need to show up to the class and listen to his brief tomorrow. All right? You better not let me down, Adrian, because I will kill you. All right, but this dude collected good data, a lot of data, and I'm excited to hear what he has to say. Right? And going back to that, like we are working for the ICT-based community on some databases for breakers, for failure swings, for fair value gaps, all that stuff. But it is a complex code situation, right? So we'll use what we have currently and help you guys. They put probabilities behind your trading as well. Right? But for most of it, like the daily profile and the candle science helps with a lot of it. Right? Your entry criteria, you guys have mastered. So tomorrow, Adrian, come on up. Finally, something other than 9:30. Austin, you ready to close it down?
Yeah, let's go. Y'all have a great rest of your day. Tomorrow is, dude, I don't even know what day it is. Like Wednesday. All right, so I'll see y'all back here tomorrow. Stay grinding on your goals and never let anyone tell you that you can't do something they've never done themselves. And I'll see y'all later. Bye, everybody.
Later, hippies.
See ya.